All right, welcome everyone. We're doing a deep dive into IRAs today,
Yes.
specifically traditional versus Roth.
Right.
And you were nice enough to send over this really cool PDF guide that kind of breaks it all down.
Yeah.
So no big financial jargon here, just trying to get down to the basics so that you can understand the core differences
Absolutely.
and figure out, what are the tax implications and really which IRA might be the best for you.
Yeah, it's a really good roadmap
Yeah.
for, anyone that's kind of just getting started or even, needs a little refresher.
Totally. Now, this PDF starts off strong.
Yeah.
Page 2 hits us with a chart that really made me stop and think.
Yeah.
And it basically says that if a couple is earning like $100,000 a year
Right.
over the course of their careers, they could earn something like $3.5 million.
That's a lot of money
That's a lot.
to think about.
It's a lot to think about. It's a lot to manage.
It is.
So this is like serious business.
Yeah, it really kind of puts the scale of retirement planning into perspective,
Yeah.
Even just seeing those numbers written out like that.
Yeah.
It's like, whoa.
It makes it real.
Yeah, and I think it also helps to kind of motivate you a little bit.
Yeah.
Like
To be serious about it.
yeah, to take it seriously. And even those small savings choices,
Yeah.
if you do them consistently,
Yeah.
it can really make a big impact over time.
Huge. Now, speaking of retirement income,
Yeah.
the guide reminds us there are really three main sources to think about, right?
Yeah.
Social Security, employer-sponsored plans, like a 401k,
Right.
and then your own personal savings.
Right.
And today we're focusing on IRAs.
Yep.
But this PDF doesn't really sugarcoat things when it comes to Social Security.
No, not at all. It's like, they kind of lay it all out there
Yeah.
on page 3.
Page 3. What are some of those realities that people might not be aware of?
Yeah. So, in 2022, the average monthly benefit
Okay.
was only about 1,657,
Okay, so not a ton.
which is, only about 40% of the average pre-retirement income.
Wow.
And that percentage actually decreases as your income goes up.
So you're telling me that if I make more money,
Yeah.
I'm actually going to get a smaller percentage back from Social Security?
Potentially. Yeah.
That doesn't seem quite fair.
I know. It's kind of counterintuitive.
It is.
But Social Security was really designed to be like a safety net.
Yeah.
It wasn't intended to replace your entire working income.
Okay.
Plus, you have to think about things like potential benefit reductions in the future.
Oh, right. Yeah.
And there are also limits on how much your spouse can receive.
Right.
So it's not a perfect system.
And then there's this quote that they pulled from Time magazine way back in 1995
Oh, yeah.
that really stood out to me.
Oh, I remember that one.
And basically, experts, even way back then, were talking about benefits might have to be reduced or, we might have to increase taxes, in order to keep up with the fact that all the baby boomers are going to be retiring soon.
Yeah.
Makes you wonder, can we really rely on Social Security alone?
I think it's a good wake-up call to be proactive and to think about, diversifying your retirement income sources.
For sure. Okay, so Social Security, maybe not the golden ticket we thought it was.
Yeah.
But the good news is we have tools like IRAs.
Right.
And this is where I get really excited because we get to talk about one of my favorite topics, which is the magic of compound interest.
Oh, yeah, the eighth wonder of the world.
Page 4 has this amazing chart that shows why Einstein called it the eighth wonder of the world.
Yeah, it's just a classic illustration of why time is so important when it comes to saving.
Huge.
And the chart basically shows the same amount saved, but starting at different ages.
Okay.
And the difference, when you look at it, by the time you reach 65,
Yeah.
it's astonishing.
It's huge. It's like it makes it really clear that the earlier you start,
Yeah, even with small amounts.
even with small amounts,
Yeah.
it can make a monumental difference.
I think, what's really fascinating about this is that it's not just about math.
Yeah.
It's also about mindset.
Okay.
The sooner you start, the more you kind of shift from that feeling of time is working against me.
Totally.
To no, time is on my side.
I like that.
And that can be really empowering.
It can. All right. So we know that Social Security might not be enough. Compound interest is our friend.
Yes.
Let's get to the heart of these IRAs.
All right, let's do it.
Now, on page 6, the PDF uses this super helpful table
Yes.
to break down traditional versus Roth, which we're going to use as our guide.
It's really, really helpful to just see everything laid out.
It is.
Side by side.
Totally. So first up, deductible contributions.
All right.
Big yes for traditional, big no for Roth
Right.
going on there.
So basically, with a traditional IRA, you can deduct your contributions from your taxable income for the year you make them.
Right.
So you're essentially lowering your tax bill right now.
Oh, so a tax break now.
Yes.
I like the sound of that.
Exactly. But with a Roth IRA, you don't get that upfront deduction.
So no tax break now, but what about later?
That's where things get really interesting.
Okay, right.
Because the tables kind of turn.
Let's get specific.
Okay.
Let's say I put $6,000 into each type of IRA.
Okay.
What's going to happen?
So with the traditional IRA, you're going to reduce your taxable income by that $6,000,
Okay.
which could result in some pretty significant tax savings right away.
Nice, nice.
For example, if you're in the 24% tax bracket, that would save you $4,440 in taxes this year.
Wow.
Now, with the Roth, you don't get that immediate tax benefit.
Okay, so then why would anyone choose the Roth?
Well, that's a good question.
Yeah.
And the answer lies in what happens when you start withdrawing that money in retirement.
Okay.
So with a traditional IRA, when you start taking those distributions, you have to pay taxes on them.
Okay.
Essentially, you're delaying that tax hit until later. But with a Roth, since you already paid taxes on your contributions,
Right.
qualified withdrawals in retirement are completely tax-free.
Wait, hold on. Did you say qualified?
I did.
Are there, like, catches here?
You're right to be cautious.
Okay.
There are rules for when you can take those tax-free distributions from a Roth IRA.
All right.
Generally, you have to be at least 59 and a half years old,
Okay.
and the account needs to have been open for at least 5 years.
Okay, so traditional, I get the tax break now.
Right.
Got to pay later.
Correct.
Roth, no tax break up front.
Right.
But if I do it right, the withdrawals are tax-free.
That's right.
Interesting trade-off.
It is.
What else should we be thinking about here?
So both traditional and Roth IRAs offer tax-deferred growth,
Okay.
which is huge.
Hey, break that down for me.
So what that means is you don't have to pay taxes on any earnings your investments make until you start taking distributions.
Oh. So whether I go traditional or Roth, my money's growing.
Yeah.
And it's compounding without, the tax man coming after me every year.
Yeah, you get to let it grow and compound tax-free.
Okay, I like the sound of that.
It's a big advantage.
Now, what about income limits?
Ah, yes.
I vaguely remember something in the PDF about that.
Yes, you're right. So Roth IRAs have income limits for contributions.
Okay.
So in 2022, if your modified adjusted gross income was above a certain amount,
Right.
you couldn't contribute to a Roth IRA.
Oh, okay.
But traditional IRAs, however, don't have those income limitations.
So if you're like a super high earner,
Yeah.
traditional might be the only way to go.
It might be your only option for direct contributions,
Okay.
but there is a strategy called a Roth conversion that we can talk about a little later.
Yeah.
Which essentially allows you to move money from a traditional to a Roth.
Ooh, sneaky.
But there are tax implications with that
Okay, yeah.
that we'll have to get into.
Roth conversion sounds intriguing.
Yeah.
We'll definitely get back to that.
Yeah.
But first, I think it's time to talk about everyone's favorite topic, taxes.
Oh.
Pages 9 through 11 of the PDF get really into the weeds.
Yes, they do.
But can we just break down the big picture differences in how traditional and Roth are taxed?
Absolutely. I think we've already kind of touched on some of the key points.
Okay.
It really boils down to three main questions. When do you pay?
Okay.
What is being taxed?
Okay.
And are there any penalties for early withdrawals?
Right.
And we've talked about the when.
Right. The now versus later.
Exactly.
Okay.
But let's dig into the what.
All right. So with traditional, I get that upfront deduction, right?
Right.
But then I got to pay taxes on the distributions when I retire.
Right.
So what exactly is being taxed?
So you're taxed on the entire distribution,
Okay.
which includes both the money you originally contributed
Okay.
and any earnings that those contributions have generated over the years.
Got it.
And with Roth, since you've already paid taxes on your contributions, qualified withdrawals in retirement are completely tax-free.
Okay. But is there a catch?
Yeah.
Is it all tax-free?
Well, there's an added bonus with Roth IRAs.
Okay.
There are no required minimum distributions during your lifetime.
Oh, okay.
So with a traditional IRA,
Okay.
you are required to start taking distributions by age 72.
Right.
Even if you don't need the money yet.
Yeah.
But with a Roth,
Okay.
you can let it grow tax-free for as long as you want.
Oh.
So there's more flexibility there.
So there is more flexibility with Roth in that regard.
Yeah.
But the PDF did say something about if you pass away
Yeah.
your beneficiaries,
Right.
they do have required minimum distribution.
They do. So there are still some rules to be aware of.
Okay. All right. Good to know.
Yeah.
Now, what about those early withdrawal penalties?
Yeah, nobody wants to get hit with those.
No.
So with both traditional and Roth IRAs,
Okay.
if you take distributions before age 59 and a half,
Well,
you're generally going to have to pay a 10% penalty on top of your regular income taxes.
okay.
There are some exceptions for things like
Okay.
certain medical expenses,
Okay.
disability,
Right.
or buying your first home.
Right.
But for the most part, it's best to think of that money as being locked away.
Right. Until retirement.
Exactly.
Okay. So good to know those exceptions exist.
Yes.
This PDF has been so helpful.
Yeah.
But it definitely, stresses the importance of talking to a professional
Absolutely.
before making any big decision.
Yeah.
Would you agree with that?
100%.
Okay.
Choosing between a traditional and a Roth IRA really depends on your individual circumstances and goals.
Okay.
And a qualified financial advisor can help you analyze your situation,
Okay.
project what your future income and tax bracket might look like,
Right.
and just make sure that you're making the most advantageous choice for your long-term financial well-being.
Yeah, and it's a good reminder that we're just, kind of scratching the surface here.
Yeah, just dipping our toes in the water.
Yeah.
There's a lot more to it.
There's a lot more to it. And that personalized advice is key.
Absolutely. There's no one-size-fits-all approach to retirement planning.
Right.
It's about finding what works best for you.
Totally. All right, well, why don't we take a quick break?
Okay.
And when we come back,
Right?
we'll dive deeper into those Roth conversions that you mentioned.
Yes.
And really break down all these tax implications of these two IRA options.
Okay.
All right, we'll be right back.
See you soon. Welcome back. So before the break, we were talking about
Roth conversion.
Roth conversions, yeah.
This is where things get a little
tricky.
tricky complex.
Yeah.
Let's try to unpack it.
Okay.
On page 12, the PDF explains that a Roth conversion is basically,
Right.
you've got money in a traditional IRA,
Yeah.
you're moving it into a Roth IRA.
Yeah.
So, why would somebody want to do that?
So there are a couple of reasons why this might be a good idea.
Okay.
It goes back to that tax treatment we were talking about before. Remember how it's flipped for traditional and Roth?
Yeah. Yeah.
So with the traditional, you get the tax deduction up front,
Right.
but you pay taxes when you take the distributions in retirement.
Right. Right.
With a Roth, it's the opposite.
Yeah.
You pay the taxes on the money going in,
Okay.
but then the qualified withdrawals in retirement are tax-free.
So it's like I'm saying, hey, I'll pay taxes on this money now
Exactly.
so that I can enjoy it tax-free later
That's a great way to put it.
when I'm hopefully on a beach somewhere.
Hopefully, yeah, sipping margaritas.
Exactly.
So this can be really advantageous if you think you'll be in a higher tax bracket in retirement than you are right now.
So let's say, for example,
Yeah.
I'm in the 24% tax bracket now.
Right.
But I think when I retire, I'll be in the 32% bracket.
Okay, yeah.
Does that make sense to do a Roth conversion then?
Yeah, that's a really good example of when it could make a lot of sense.
Okay.
You would be paying the taxes at that lower rate now, and then avoiding paying at that higher rate later
Okay. Okay.
when you're withdrawing.
I get it. But the PDF does mention that you have to pay taxes on the amount that you're converting
Right.
in the year that you do it.
Yes.
So if I've got a huge chunk of change that I'm converting,
Yeah, it could be a hefty tax bill.
that could be a big tax bill.
Yeah, you definitely want to factor in those potential tax implications.
Right.
And make sure that a conversion aligns with your overall financial plan.
Okay. And the guide also points out that if you're converting money that hasn't been taxed yet,
Right.
so let's say from a traditional IRA where you got a deduction on the contribution,
Right. Exactly.
then you're going to be taxed on the original contribution and any earnings.
Yep.
That could be a lot.
It can be a significant amount. Yeah.
Yeah.
This is why it's really, really important to work with a qualified financial advisor.
Okay.
They can analyze your situation
Okay.
and guide you through the decision-making process,
Got it.
help you determine if a Roth conversion makes sense.
Okay. And how to do it in a way that's tax efficient.
So Roth conversions, powerful tool,
Powerful,
but
come on.
complex. Get some advice.
Yes. Always good to get advice.
Okay, now I think it's really time to just
Yeah.
tackle these tax implications head on.
Let's do it.
Pages 9 through 11
All right.
get really in depth.
Yeah, they do.
Can we just focus on the big picture?
Yeah, absolutely. We've already laid a lot of the groundwork.
Yeah, okay.
So with traditional IRAs,
Yeah.
the key takeaway is that your contributions are typically tax deductible in the year that you make them.
Okay.
And this can lower your taxable income which leads to some nice immediate tax savings.
Right. And then later, when I'm retired and I'm taking those distributions,
Right.
I'm going to pay taxes on that money.
Exactly, as ordinary income.
Okay.
And remember, you're taxed on the entire distribution.
Okay.
So the money you put in plus any earnings.
Got it.
Now with a Roth IRA, it's the opposite.
You don't get that upfront tax deduction.
Right.
But qualified withdrawals in retirement, tax-free.
Okay, so it kind of feels like I'm gambling on what my future tax bracket's going to be.
It's not entirely a gamble.
Okay.
We can't predict the future perfectly, of course.
Right.
But there are ways to make educated guesses.
Okay.
So, for instance, if you're early in your career and you expect your income and therefore your tax bracket to be higher in the future, Roth IRA might be the better choice.
Okay.
You're essentially paying taxes at a lower rate now
Gotcha.
to avoid potentially higher taxes later.
I see, I see.
What about people who are closer to retirement?
Yeah, what about them?
So if you're nearing retirement
Okay.
and your income is relatively stable,
Okay.
a traditional IRA might be more appealing.
Okay.
You could get a pretty significant tax deduction now.
Right.
And you might even be in a lower tax bracket during retirement.
Right, especially if you're,
Yeah.
not working as much or anything.
Yeah, exactly. Your income might decrease.
Okay, so it all depends.
It all depends.
On your own individual circumstances.
Yeah, exactly.
And what you think is going to happen.
Your expectations for your future income and tax situation.
Got it. Got it.
And remember, there are a lot of other factors to consider besides just taxes.
Yeah.
Things like your risk tolerance, your investment goals, your overall financial plan.
So many factors.
This is another reason why getting that professional guidance can be so valuable.
Right, right. A lot to think about.
A lot to think about.
This is great information.
Yeah.
It's a lot to digest.
It is.
So, if you had to say, what are the key takeaways?
Yeah.
What do you want people to walk away with?
When it comes to choosing between traditional and Roth, I think the most important thing is just to understand there's no right or wrong answer.
Okay.
It really depends on you,
Okay.
your individual situation.
Got it.
The goal is to minimize your tax burden over the long term.
Right.
And that might mean taking a deduction now with a traditional IRA.
Okay.
Or enjoying tax-free withdrawals later with a Roth.
Got it.
It's about finding that balance.
That's a great point.
Yeah.
And I think it's worth reiterating, talking to that financial advisor.
Absolutely.
They can really help you make the best decision.
They can. They can look at all the different angles.
Right.
And help you project those future scenarios.
Yeah, that's great.
Make sure you're making the choice that aligns with your goals.
Awesome. Now, before we wrap up our whole deep dive into IRAs, there's one more topic I want to touch on.
Okay.
Rollovers.
Rollovers, yes.
Page 12 of the PDF mentions them.
Right.
But it'd be great to elaborate a little bit more.
Yeah, let's break that down.
What exactly is an IRA rollover?
Okay, so a rollover is essentially when you move money from one retirement account to another without triggering any taxes or penalties.
Okay.
It's like a strategic transfer within that retirement savings world.
So if I change jobs and I want to move my old 401k into an IRA.
Exactly. That's one of the most common scenarios.
Yeah, okay.
You might also do a rollover if you want to consolidate multiple IRAs into a single account.
Gotcha.
Which can make it a lot easier to manage.
Right.
And give you a clearer picture of your overall savings.
Makes sense. Makes sense.
Yeah.
Now, are there different types of rollovers?
Yes.
I know we talked about Roth conversions.
Right.
That's a little different.
That is a specific type of rollover.
Okay.
Where you're moving money from a traditional to a Roth.
Right.
And as we discussed, there are tax implications with that.
Right, because you're changing how the money's being taxed.
Exactly. You're changing the tax treatment.
Gotcha.
But with a regular rollover,
okay,
you're typically moving money between accounts of the same type.
Okay.
So like a traditional to a traditional or a 401k to a traditional.
Gotcha, gotcha.
So in those cases, there's no tax hit because you're not changing the fundamental nature of the account.
Okay, that makes sense.
Yeah.
But the PDF does say you got to be careful.
Yes, you do.
Got to follow the right steps.
Absolutely.
Otherwise, you can end up with taxes and penalties.
Yeah, if you don't handle it correctly.
That sounds scary. What's the best way to do it?
So the safest way is to do what's called a direct rollover.
Okay.
Where the money is transferred directly from one custodian to another.
Okay.
Without ever passing through your hands.
Okay.
So this minimizes the risk of making a mistake and triggering any unwanted tax consequences.
So basically, talk to my plan administrator.
Yeah.
Talk to my financial advisor.
Exactly.
They'll walk me through it.
They can guide you through the steps and make sure everything is done correctly.
Awesome. Rollovers, another important piece of the puzzle.
Another piece of the puzzle.
And sounds like, again,
Yeah.
talk to a professional.
Get that advice.
Get the advice.
Absolutely.
Awesome. Well, I think we've covered a lot of ground today.
We have.
We talked about Social Security. We talked about compound interest.
Right.
We got into the nitty-gritty of traditional versus Roth IRAs.
We did.
We even talked about rollovers.
It's been a journey.
It has. What are your final thoughts for our listeners?
Well, I think the biggest takeaway here is that retirement planning is a journey.
Okay.
It's not a destination.
Right.
It's about making informed choices along the way.
Okay.
Starting as early as possible.
Yeah.
And seeking expert guidance when you need it.
And it's about taking control of your financial future, right?
Absolutely.
Making that money work for you.
Exactly. The power is in your hands.
I love that.
Every step you take toward planning for a secure retirement is a step towards a brighter future.
Beautifully said. And remember, everyone, this deep dive was just a starting point.
Yeah, jumping off point.
Keep learning, ask questions.
Yes.
And most importantly, connect with a qualified financial advisor.
That's key.
Create a plan that works for you.
Absolutely.
Thank you so much for joining us.
Yes, thank you.
On this deep dive.
Until next time.
We'll see you next time for another insightful exploration.
See you then.
All right, rollovers.
Yeah.
So we're talking about
basically moving money
okay.
from one retirement account to another
okay.
without having to pay taxes or penalties.
Okay, so like a strategic transfer.
Right, yeah, like you're just shifting things around
okay.
within that retirement universe.
So like a common example would be if you change jobs.
Right.
And you've got that old 401k just sitting there.
Exactly.
And you want to move it into an IRA.
Yeah, that's a very common reason people do rollovers.
Okay.
You might also do a rollover if you want to, like, combine multiple IRAs into one, just to make things easier to keep track of.
Right, just simplify everything.
Exactly, yeah, so you have a clearer picture of your total savings.
Makes sense.
Yeah.
Now, are there different types of rollovers?
Yeah. Yeah, there are.
Because I know we talked about Roth conversions.
Right.
But that's a little bit of a different animal, right?
Right. It is, yeah. A Roth conversion is a specific type of rollover.
Okay.
Where you're specifically moving money from a traditional IRA to a Roth IRA.
Right. And as we discussed,
there are those tax implications there.
Right, because you're changing how it's going to be taxed later.
Exactly. You're changing that tax treatment.
Okay, good.
But with a regular rollover,
okay,
you're usually moving money between accounts that are the same.
Okay.
So like a traditional to another traditional or a 401k to a traditional.
Okay.
So in those cases, there's no tax hit. Because you're not actually changing anything fundamental about the account.
Yeah.
It's just moving it from one place to another.
That makes sense.
Yeah.
But the PDF does say that you need to make sure you follow the rules.
Oh, absolutely. Yeah.
Oh, what?
Yeah. If you don't handle it correctly,
yeah,
you could get hit with those taxes and penalties.
Yeah. So what's the safest way to do this?
So the safest way is to do what's called a direct rollover. And that's where the money is transferred.
Okay.
Directly from one custodian to the other.
Okay.
It never actually touches your hands.
Okay.
So it minimizes the risk of making a mistake.
Okay.
And having the IRS come knocking.
So basically, talk to my plan administrator.
Yeah, talk to your plan administrator.
Talk to my financial advisor.
Your financial advisor.
Yeah.
They'll help me out.
They can walk you through it. Yeah. Make sure it's all done correctly.
Awesome. So rollovers, another important thing to think about.
Another piece of the puzzle.
And yet again, we're back to...
get some advice.
Get some professional advice.
Yeah, it never hurts.
It never hurts to ask. All right. Well, we covered a lot of ground today.
We did. We did.
Social Security, compound interest.
All the important stuff.
Traditional versus Roth. We even talked about rollovers.
Yeah, a lot of information.
What are your final thoughts for our listeners?
I think what I want people to take away from this is... retirement planning is not a one-time event.
It's not like you just set it and forget it.
Okay.
It's an ongoing process.
Right.
It's about, making smart choices along the way.
Okay.
Starting early.
Yes.
And knowing when to ask for help.
I love that.
Yeah, you don't have to do it alone.
And remember, this deep dive was just a starting point.
Yeah, just a taste.
Just the tip of the iceberg.
Exactly.
Keep learning, keep asking questions.
Yes, keep educating yourself.
And, most importantly, talk to that financial advisor.
Absolutely. That's key.
Create a plan that works for you.
Yeah, a personalized plan.
Awesome. Well, thank you so much for joining us today.
Thanks for having me.
On this deep dive into IRAs.
It's been fun.
We'll see you next time for another insightful exploration.
See you then.